with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, March 6, 2026. Some shout outs to Audrey, Pam, Tom, Walter, Larry, all the folks tuning in week and week out. We do greatly appreciate you staying up with what's going on out there. Speaking of which, a lot going on this week. I got a message from Chandler. Shout out to Chandler, who said to me in the message, David, how is it that the last thing you said on your podcast was Iran? And the first thing that I heard about on Saturday morning was Iran. They say history doesn't repeat itself, but it often rhymes there, Chandler. And listening to that whole Iran story unfold last week, it was very reminiscent of the last time that we said we were talking with them and giving them a little bit of time. I think we said we'd given them 2 weeks and then they were bombed the very next day within 24 hours. It was just kind of shaping up to kind of sound similar, and it was on my radar. I was concerned about it. No crystal ball, just kind of a hunch. But we'll give you another one. Cuba. I expect to hear that in the news in the next 4 to 6 months. So we'll see if that comes to fruition. Not that we're going to drop bombs on Cuba, but I do think we're going to make a move there. Not that I agree with all this stuff, but hey, that's what's going on in the world. So let's talk about it. Dow Jones Industrial Average down 3% this week. The S&P 500 down 2%. The NASDAQ Composite holding in a little bit better, down 1.2%. The Russell Small Cap Index down 4% on the week. Taking a look at the Volatility Index. Now we're getting somewhere with the VIX up 48% this week, finishing the week at a 29.5. And look, when the VIX gets up over 30, you got to buy something, all right? I didn't buy anything this week because it didn't get over 30, but we get over 30 on the VIX. It's just always prudent to just buy something. Just close your eyes and buy something good when the VIX is over 30. Doesn't mean it won't get worse from there. I've seen the VIX at 50 and 60, but it usually is a good time to buy something. So we'll be looking to do something along those lines maybe next week. Long-term bonds as measured by the TLT, also down this week, down 2.6%. Kind of interesting to see them sell off as well. We'll talk more about some things there with bonds here in just a moment. I will say one thing that I did see this week that made me feel really good. The dollar had a super strong week. So even though the bonds sold off, long-term bonds specifically sold off a little bit this week, the dollar was strong. And, the last couple of world events that have kind of shaken markets here the last year and a half, dollar didn't really react very well. And I'm really glad to see it back in the action there because it does say that people are still looking to the U.S. dollar when they're afraid, and that's good for us. Buys us some time to get our act together fiscally. I know it's a lofty dream, but it's one that I do hold on to. So what about the sectors? How'd they do this week? As you can imagine, everything was down except energy. Energy up 1.1%. Our energy stocks responding in kind. They were a strong part of our portfolios this week, but everything else was down quite a bit. Semiconductors down 6%, utilities down 2%, discretionary down 2%, consumer staples. It's been a safe haven. It's been an area of the market where a lot of money's been going year to date. It's still up 10.4% on the year, but it was down 4.5% this week. I thought that was interesting. And healthcare down 4.6%. So what we saw this week, and the other ones are down too. I'm just going to stop right there for a moment. What we saw this week was just widespread selling. Sell it all. Just get out of everything. Sell all my stocks, unless it's oil related, even the safe ones that have been doing so well because I got some profit there. Sell my bonds. I don't even want money there either. Sell gold. It was down 2% this week. Sell silver. It was down 10.5% this week. You see where I'm going here, right? Just sell it all. There's a lot of that happening this week. I'm not sure if that's individuals as much as it is computers. I mean, I tell you what, I have seen some computer algorithmic battles this week, baby. Let me tell you. I mean, knock out, drag down, fight at 6780 on the S&P 500. But the Bears did win. We did break down below that. But remember, I think I told you a couple weeks ago, 6750 was on my radar as a level that we needed to hold. That level actually edged up a little bit since I mentioned it. Moving averages, levels of support, resistance, all these, they're always evolving. So I might mention something a few weeks ago at one level, 6750, but that might get adjusted up or down a little bit as time goes on. It actually kind of pushed up to about 6780. Anyway, what a battle that was Thursday, but the market did fail. It did fail there, dropped lower, finished the week, the S&P 500 at 6740. And we always talk about the S&P because that's the only one that really matters when it comes to broad market stuff. So a few things. Yes, the market was down, but honestly, it wasn't down anywhere near as much, I think, as it could have been. And I don't think that starting off this week, it was down anywhere near as much as anyone expected. I mean, gosh, it was actually up on Monday. Like, how did that happen, right? We launched bombs on Saturday, market's up on Monday. There is an adage out there, when the missiles fly, it's time to buy. And I don't want to be glib. That's not how I think at all, but it is something that was said a few times this week. That's my industry for you. Pretty callous, but that's how the market can be. Because historically, Mideast conflicts, historically, they tend to bounce back pretty quickly. As a matter of fact, 95% of the time, just about 95% of the time, markets are positive in about 8 weeks after a Mideast conflict. And the market knows that. Another big thing for the market when this thing started was Iran's lack of ability to respond. One of the things to kind of keep in mind are people's mentalities on things, leadership mentalities, et cetera. And not to go off into the weeds, but this stuff is important. It all kind of works together. Like Iran, they're 95% Shia Muslim. And the Shia believe in something called the 12th Imam. They believe this 12th Imam comes back in the midst of war, chaos, bloodshed. And some believe they can hasten the return of this 12th Imam. I actually used to worry about President Mahmoud Ahmadinejad, if you remember him. He was president from 2005 to 2013. And the reason why I was kind of concerned during that period of time, because this guy actually talked openly about bringing back the 12th Imam, and he was really aggressively pursuing nuclear weapons. Bottom line is, some folks in leadership there believe they can hasten the return of this 12th Imam with chaos and bloodshed and war. And I think one of the bright spots that you could probably pull out of this week is that if Iran had a nuclear weapon that they could use, it would have been used. And it wasn't. So I think the market sniffed that out early as well. And not only that, really lack of response in general. They really weren't getting anything through the defense systems in the region. I think the market keyed in on that and probably thought this thing was going to be over pretty quickly. But then the market kind of woke up to the fact that just because they weren't responding in kind, it doesn't mean that they can't respond. It doesn't mean that it's going to be over quickly. With the drone attacks and some missiles getting through and spreading their attacks throughout the region, not just targeted at Israel, I think the market realized that, hey, this could drag on for a while. It could be a conflict that lasts for some time. And then there's, of course, the Strait of Hormuz, right? That's where 20% of the world's oil supply comes through the Strait of Hormuz, connects the Persian Gulf, the Arabian Sea. And at its narrow point, right next to Iran, its narrowest point is 21 miles wide. It's about the distance from the eastern shore of Virginia to Norfolk there, the Bay Bridge Tunnel, for those of you that have crossed that. But there's two different channels, one going out, one coming in. They keep a buffer in between them. The bottom line is these ships are only about 8 miles away from land going through this really tight turn, and it's effectively closed right now. Okay, Iran's pretty much shut that down. So that's going to put some pressure on oil. If oil shocks remain and they last, then that could change that normal outlook for Mideast geopolitical events. I mentioned a moment ago, 95% of the time, markets are back up after about 8 weeks. May not be the case this time if oil continues to stay under pressure because of the Strait of Hormuz and how all that plays out. So look, all that is unfolding. These are things that we'll be tracking as we move forward. One thing really interesting about this week with the market is that although investors seem to sell everything, software came back. Okay, software actually had a good week and things came back pretty strong. I mean, look, Pinterest, last time we bought Pinterest, we bought a round of it on February 13th for $14.86. Well, it closed this week at $20. It was up another 16.8% this week. It's now up 34% from our most recent purchase. That moved up big this week. ServiceNow, another software company, up 15% this week to $124. And we just bought some of that on February 6th at $103. So it's about 20% from there. And then CrowdStrike, they are cybersecurity. They were up 15% this week. We got that in our models. IBM, we got that in our income models. It was up 7% this week. So we saw software really coming back kind of strong. It's been beaten up pretty hard in recent weeks over AI concerns. We took advantage of that beatdown. I thought it was really overdone on multiple levels, and we added to some of our holdings. And that really helped us out this week. That and our managed future strategy, which is just doing great. It was flat on the week, but I'll take flat, in the market that was this ugly, especially when bonds are down too. So our relative performance has been really fantastic. I've been very pleased with that. Don't take my word for it. Just log into your app, go online, take a look at how you're holding up. Things look pretty good here with how things have gone, even though the markets have been a bit of a mess. Now, here's what's more concerning to me than the war, and that is the economy. So we had a jobs number come out today, and I think the market was looking for up 50,000. We got a 92,000 loss in jobs, 92,000 jobs lost. Look, Jay Powell said months ago that these numbers are likely off by 65,000 to begin with. So what do you need to add 65,000 to that? Is it more like 150,000 jobs lost? I'm not really sure, but it was a negative number. Market was not expecting that. That's not good. On top of that, we had a hotter than expected inflation number last week, if you recall. That's not good. Inflation, weakening jobs, these things are concerning. GDP number, if you remember a couple weeks ago, much lower than what we expected. Next week, we get CPI and PCE. These are two more inflation numbers, PCE being the most important because the Fed pays a lot of attention to that. I'll be watching that real close next week. We'll see what happens with those numbers. But the economy, I'm concerned about. Bottom line is this. We were concerned about the market coming into 2026. You go back, listen to 2026 Outlook, read the 2026 Outlook newsletter. We were concerned coming into this year. We thought it was going to be sloppy. We thought there was going to be downturns, and we just got defensive. We spread the money out. We pulled some money out of the U.S. market. We got more defensive. We've done some different things with diversifiers, the managed future strategy, and these other things to try to create protections and diversification so we can handle curveballs that this market might throw at us. And we got one thrown at us this week, and the portfolios did their job. So I'm very pleased with that. We got some cash on hand. The VIX gets over 30. I got to buy something, okay? Even if I don't think I should, I have to. You just have to. It's just like a rule, right? 30 plus VIX, you got to buy. So we'll probably buy a little something, but I think the market can go lower. I think it can go lower. One of our technical strategists that we work a lot with, they say that the market's got to stay around this level for a close next week to confirm the breakdown. And if it's confirmed, they think we're definitely going down the 200-day moving average, which is 65.78 on the S&P. And they think it's going to be just a pause there, and we're going to go lower than that. I will say this, we'll be watching all this very closely. The 200-day moving average is important. There's a more important indicator that we follow that won't come about till the end of March, and we will see where we stand when that happens. If we're above it, then good. If we're below it, then we'll get more defensive. So we might buy something at the VIX 630 next week, and we might be selling some stuff if we break some key indicators moving in towards the end of the month, just because that's how we operate here. We do not believe that our opinion on what the market's going to do next is right no matter what. We have opinions. We lean into those opinions, but when the market gives us different information or different data or takes a different turn, we're going to react. We're not going to insist that we're right because our job is to make you or save you money, not to be right with what we thought the market was going to do yesterday, okay? So we've got a game plan in place. I like where things sit. Don't be alarmed. Take a look at your accounts. They're holding up wonderfully. And that's across all models, even our aggressive model. We don't have many of those folks. Big shout out to George, Dana. We don't even have many folks in that. But go take a look. That's even holding up pretty nicely. So look, I think things are pretty good here at the moment with what's going on for us. Markets don't look good. I do think that we're seeing all these moving averages converge. We're seeing a market that's not gone anywhere since October. There's a lot of things I think to be a little bit more concerned about for the broad market, but we're already positioned for it. You had a couple of people asking this week, what are we doing in responses? We've already done it. We've already done it. This just doesn't matter at the moment. we've already made the moves that we needed to make before this happened. So we didn't need to respond in any way, shape, or form this week. We're going to kind of wait and see how things unfold further. We maybe do some buying, maybe we'll do some selling. It all depends on how this market plays out. The nice thing is we are in a position to be able to do all of that and weather the storm. So I'm going to wrap up. Between now and next meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Retire a little early, take that big trip, just flat out retire. How about that? Get that new car. Hey, whatever your goals are, you know what they are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.